Okay, recording this video, it is well after the close on 14th of July 2015, which happened to be Bastille Day in France. I do hope your trading is going well. In this video I want to talk about the big picture. I'm going to roll through my global macro charts, which look at all the forex contracts and then all the kind of investable assets type charts. The big picture story is basically that the problem that we have is in bonds. It is not in equities. And so this video is really a little bit of a follow-up to a video I did back in March 2015 talking about bonds. Am I crazy calling for a change in trend in the bond market? And basically since that day we have had a reversal in the bond market, and the bond market is looking particularly weak. So I'm going to show you those charts, but before doing that I'm just going to roll through the equities charts and just show you how strong the market is at the moment and why we bottomed last week. Last week we had a huge amount of volume, huge amount of activity, and we could not go through this 2040 level here. This is my kind of classic setup with the 45-minute chart, 3 times that, 135-minute, and then to the daily chart, so you kind of zoom down into the lower time frames. And this one's a classic because on the 45-minute chart we had topping out up here at the 2120 with pullback to end of trend, bearish divergence. The market kind of falls into this big downtrend that we had. And then this is last week's activity, basically, where we spent a lot of time backwards and forwards. It was very jumpy during the days and night sessions, basically because of all the news coming out of Greece. But we had a trifecta pattern kind of go on here. The 3 indicators that are all non-correlated. First of all, price made pullback to end of trend. We had an exhaustion sell, bullish divergence kind of come in, and this is a classic where I talk about straight lines in better momentum here. Market doesn't like straight lines, it likes jaggedy patterns because it's emotionally driven, it's not kind of sensible. So we get an exhaustion and bullish divergence, and we get little bullish, bullish, bullish kind of divergence patterns here, and then finally, bang, another kind of retest down to a flush pattern out. That flush pattern, we're flushing out the last of the sellers at that point, so volume, momentum has put in a nice kind of bottoming pattern there. So that's price, volume, momentum, and then you look at all the blue professional bars happening on the spikes down. The first one here, the next one here, then this one, this one, this one, and so on. So we've got kind of nice spiky blue professional down bars into 2040, and they were holding 2040. We just were not going through 2040. So that's the bottoming pattern, and then now we've broken into an uptrend above resistance. Yeah, it was a little pullback to end of trend pattern, but that was all we had on price. We just had a little bit of kind of an end of trend signal there. We'll get another one as we kind of have broken above resistance again, and we kind of keep going. You're not looking for one of these, you're always looking for all 3 to kind of come together, and this was a classic. It was jerky and spiky and, you know, all kinds of volatility kind of going on here at the bottom, but eventually that pattern got made. And then Friday's activity, we had the first kind of jump, and then we've been away Monday, Tuesday this week, kind of breaking up into an uptrend. So that's on the 45-minute chart. And then when you look up at the higher time frames, what do you know? We've got supports kind of coming in here on both time frames. So we got a trending move on 45 minutes, syncing up with a cyclical move, resistance to support on the daily chart here. We've got exhaustion patterns, bullish divergence kind of going on, and that's why we held at 2040, and now we've broken into an uptrend. Tuesday's reading was pretty weak on the upside. It was kind of low volumes, amateur up bar type stuff, a Rambo pattern on 135-minute. So we could easily kind of go down, and any kind of dip, what we'd be looking for is the professionals to kind of step in with blue professional down bars, maybe on the 45-minute chart. I don't know if we're going to close this gap at 2080 kind of going on here, not sure about that, but any dip, what we'd expect now is for that to kind of be bought up by the professionals and this uptrend to continue on the way. So equities bottomed last week, and this chart I want to show you, this is the daily and the weekly chart that I'm going to be using on all the global macro charts going forward. And what was interesting is we've also got cyclical support happening on the weekly chart here. This is a blue professional down bar going on the weekly chart, and it was a high volume churn bar 10.5 million contracts traded last week. Now this blue professional bar with this is better volume indicator, and high volume churn means that we have high volume but relatively small range. And so when that happens on a down bar, when we're kind of at the bottom of a sequence here, that's buyers coming in and compressing the range, so making that bar relatively short compared to the amount of volume that kind of went through, and that's churning happening at the bottom. So a lot of people kind of selling out and just being picked up by professionals that are anxious to buy that bottom. The bottom kind of gets pushed up a little bit, and we find a little bit of a bottom there. It'll be weekly cyclical support that comes in, that will go off at the end of this week. And so we've got a double going on here. We've got support on the weekly chart, support on the daily chart. We're going to be going through the highs up here, but we might have to go some weakness kind of beforehand. That kind of pattern was seen across all of the different, the major indices. We saw it in the Dow, in the Nasdaq, in the Russell, and in the S&P 500. Obviously, the S&P 500 very close to the E-mini. Exhaustion sell, bullish divergence comes in, cyclical support. On the Russell, exhaustion sell, cyclical support kind of comes in. The Dow, exhaustion, bullish divergence, cyclical support, and the same story on Nasdaq. So, as you'd expect, all the indices starting to kind of signal together. So it's all of that very strong. So equities, I'm not worried about. Equities is we're going to kind of, keep kind of not. I don't know whether we're going to be powering ahead or whatever, but I'm not worried about a sell-off in the equities market. The sell-off that we have happening at the moment is in the bond market. So. Bond market has been an uptrend since basically 1981, when the interest rates kind of peaked out. I don't know what the value was for the Fed numbers there. I think it was like 16.5% or something like that. Anyway, we had record high interest rates back then, and basically for the next 30 years, 35 years, we've been going kind of down, down, down in rates, to such an extent that now we have zero rates, from the Fed, and in some countries around the world we've had negative rates, which is just, the craziness that we're through the looking glass here. The bond market is starting to kind of change direction and go down, because now rates are starting to move up. But it's interesting that there are kind of two patterns kind of going on. In the US, the reason why rates are going up is because the Fed has supposedly saved the day, and the US economy is looking stronger than elsewhere. I mean, it's not great, but it's a little bit better. Certainly it's better than if you're in Greece right now, or Japan. So the economy in the US is a little bit stronger. The Fed's been threatening to raise rates, and so that looks like it's going to kind of happen potentially this year. And so that's why rates are starting to go up in the US, and therefore the bond market kind of goes down. But around the rest of the world, the problem is rates are going up because people are scared, really scared, that we've just gone too far with government debt. And what's happening in Greece is prime example. We've also got Puerto Rico kind of having problems. And you can see some of the kind of states and cities around the US as well, individually kind of having problems. But rates are kind of going up in some of the periphery countries in Europe because people are scared that all of a sudden, bonds, government bonds, do not look like the safe investment of years gone by. Who knows whether the Greeks are going to exit, whether they're going to cut their bonds and whatever, but the Germans are dead against it. But at some point, we have to face facts. It's like it's just too much debt in the system. So the problem is over leveraging around the world, and then that the US story is relatively, compared to the rest of the world, relatively better, and so rates are going up. So when I did the video back in March on the bond market, we were coming up to this little sequence here. On the daily chart, we'd had an exhaustion, pullback to end of trend kind of sequence here. We had this the flash crash in bonds back in October last year, and then we kind of topped out just above that. Blue professional up bars, exhaustion buys, and then we had this pretty steep decline that we had after I put out that video. But notice that it was kind of led by the amateurs, the Rambo patterns, leading the way here, and that's not going to work out. We're going to bounce from that when the amateurs are kind of piling in short, they're going to come out, and we went and retested the highs to more rainbow patterns the other way, so that these amateurs were getting either taken out on their shorts here or try to go long at that point. So that was a rainbow to rainbow channel, and then it broke on the daily chart into a really nice downtrend with that blue professional bar. That is falling through the ice. Blue professional bar through support after a pullback trend of trend sequence with exhaustion by bearish divergence and so on. Bang, we're in a downtrend. And what's interesting on the daily chart is the last couple of rises that we've had up, this one, and this one, it's all been blue professional bars with exhaustion patterns and flush patterns and so on the rises there. So the professionals were getting short on the way up here, then they got short, they chased it down, they said, right, I'm out, I'm getting short. Any strength, they've been getting short here, and we know they're getting short because the lows of those blue professional bars get broken. Yeah, we play with the highs and then bang through the lows. As soon as we've done that, they were getting short on that little bit of strength that we had on those couple of days. This one here, particularly this one that we had last week. So blue professional up bar into resistance, flush pattern, and then the lows of that get taken out 2 days later, bang. They were selling any strength here. So on the daily chart, although we've had pullback to end of trend, we've not had exhaustion. Sell on the downside. The blue professional bars are happening on the rises, not on the bottoms, kind of down here. And when you look at the weekly chart, this is the blow-off move that we've had up to here. We should be putting in a pullback to end of trend, but this seemingly is so weak at the moment. We're busting through the support, didn't hold at that point, and these blue professional bars are happening on those rises. So the next kind of leg down would be through these kind of recent lows here. Today's bar was a very weak kind of little amateur up bar type stuff. So let's see, there's still a little bit of cyclical energy to be worked out, pull back to kind of dirty end of trend on the weekly chart, but this just shows the weakness because the professionals are selling down there. Now the 30-year is the weakest of the lot. The strongest of the bonds have been the shorter term bonds. The 10-year pullback to end of trend. This one we bounced off the pullback, but again, look at what happened on the 10-year here. We had our the flash crash here. We came up into those highs with flush patterns, blue professional up bars here, and this last sequence here, the last blue professional bars that we had on this little rise, they sold it down at that point. So we're flirting with this kind of resistance level at this point, an amateur up bar. It's not looking good, and this potentially is kind of in play to break through this pullback level and continuation of the downtrend. With the 5-year contract, again, it shows a little bit stronger here, but amateur up bars after we've had some kind of blow-off activity here with rainbow patterns, we're starting to weaken. Strongest patterns on the 30-year, and let's see what happens here, of whether we can continue through these lows. Equities is looking strong, but this is a change in trend happening. Whether we're going to work out this pullback to dirty end of trend on the weekly chart, I'm not sure, but this activity with the blue professional up bars is just showing how weak those 30-year bonds are. So that's where the problem lies, and the last time I did a video we had this kind of shakeout activity where we had initial drop down, which were the rainbow patterns on the daily chart here, bang, and then we tested back up with more amateur up bars, rainbow channel, and we broke into this downtrend, and I don't think this is over. I think we're going to continue down. So look out for the bonds, because that's where kind of the problem lies. On the other hand though, we're starting to see a bottom being made in some of the commodities. So crude and copper, I've got the makings of the beginnings of a bottoming kind of process here. So crude, after a little bit of my fiasco with crude, where I got a nice kind of break to the upside and then just really totally missed this break into the downtrend here. But ever since we broke into this downtrend on the weekly chart here, you can see now we're down at 50. We've had exhaustion sell, blue professional bars picking up at the lows. A pullback to end of trend is what we're making on the weekly chart here. And that's blue professional down bar is really significant. We've got a little bit of time to run before cyclical support kind of comes in on the weekly chart. This 50 level is absolutely key. On the daily chart, you can see the amateurs getting wrong-footed. This is where everybody's talking about, crude going to $16, and the amateurs getting wrong-footed with an exhaustion and amateurs. That's unstable. When you got all the amateurs running for the doors, that's when we had a little bit of a bounce. Rambo to Rambo channel. we're now testing back into that area, blue professional down bars. So it's got a little bit of time to run, pull back to end of trend, but that blue professional bar is really significant on the way down. So I'm just going to be watching that over the next couple of weeks to see how this kind of plays out. We've had an exhaustion sell, we've got to put in another bullish divergence, whether we come, then we want to see some amateur bars kind of testing down and then a break into an uptrend. So it's early in terms of that, but that's the beginnings of the makings of something like a bottom in crude. And it's interesting that it kind of comes with the Iran deal kind of being announced today. That kind of plays into the news story, kind of playing into what's going to happen in crude. And the news stories are saying, well, Iran's going to come back into the oil market, therefore supply will increase, therefore prices go down. Well, they didn't go down, so that's showing that we've got some inherent strength kind of going on here. So crude and then copper, same time deal. This weekly down blue professional bar, very significant. A little bit of time to run before we get across there on better sine wave to be pulled back to end of trend, and we busted through support here on the daily chart, so we've still got to make pull back to end of trend here. But that exhaustion activity, blue professional down bars into $2.20 is really kind of significant there. So around this kind of price point is what I'm going to be looking at over the next several weeks to see if that actually forms a bottom, and then we start to get some strength and break into an uptrend. So it's early days, but there's potentially kind of a bottom starting to form in those kind of contracts. What do we got next? To the currencies. So because the money is running into US equities at the moment, not necessarily bonds, we've got strength happening in the US dollar. Now we have done all of last year, basically 2014 was the story, was the strength in US dollar. We topped out kind of temporarily, kind of ups here with an exhaustion pattern, and now we've had some weakness. On the daily chart it was really nice, pull back to end of trend. Look at that with all those blue professional up bars, bang, exhaustion pattern there, and then after the bearish divergence, that weakness is now kind of, that's as much as we're going to play. It's interesting that it's been playing all around this one blue professional, kind of spiky bars, and I say the highs and lows are really significant. We kind of flirted with the lows a couple of times, we're back into the zone now. Now we're going to be flirting with the highs, and this is what I'm waiting for, the cyclical cross on the weekly chart for the confirmed strength in cyclical strength, price strength in the dollar index, and we have a continuation of the rally in the dollar index. And so the money around the world is kind of running into US dollars and into equities. Those are the strongest kind of plays at the moment. On the flip side though, we've got weakness happening in the euro, and I put out a video probably a week or so ago talking about a lurch down in Forex. It happened in Aussie dollar. We had a big lurch down almost like the day after I put out that video, and I think Canadian dollar as well. But the euro is the one that's really kind of critical here, and $1.09.5 is the critical level here. So I mean, this has just been kind of backwards and forwards based on micro news coming out of Europe and the Greek kind of deal, no deal, whatever. And that support level, that's what I'm waiting for, that to be kind of cracked on the downside. And the reason why it's going to go is because cyclical resistance is going to come when we get the crossover and better sine wave. This is just itching to turn down, and we'll have another crack down at parity. 105 was the bottom so far in the euro, and we'll be looking at parity versus the dollar. And so when that energy, once we got those two energies going in that direction, the cyclical energy will be pulled back to end of trend on the weekly chart. We'll broken through support here into a downtrend move on the way down, and we'll see what is the news event, what is it the kind of that will drive this through support into that downtrend. I'm quite convinced that is coming, but just it's taken a little bit of time since I put out that lurch video. Of course, the same type story happening in the British pound, but as I've said all along over the last several months, the strongest of all the forex contracts has been the British pound. So if you've been following me, I was talking about this kind of bottom being made in the British pound, and then when we had this kind of break to the upside, that was pulled back to dirty end of trend. A little bit of a shakeout kind of bar here, where it just cruised into kind of new lows, and then flushed out, very weak selling, bang, broke into this little kind of uptrend. You know, we've had cyclical support on the daily chart come in, and it's kind of crept a little higher. It's the strongest of the lot. You know, if you've got money anywhere in Europe, you're moving it into pounds. You're not bloody, you know, waiting around to find out what the Germans and the French are going to do with the euro. The euro is not a good story right now, so I'd expect, you know, the weakness in the euro kind of translate into a little bit of kind of temporary strength in the British pound, but also kind of more strength in the dollar. But anyway, so that needs to play itself out, but it is the strongest of the lot. You know, what I've been looking for over the next few days is maybe an amateur up bar kind of into this 158 level to show it's really weak. You know, better momentum is, we've had our exhaustion pattern, our bearish divergence, we're coming back up, you know, some kind of weakness there into cyclical resistance, but it's the stronger of those pairs, and it's just the money running out of the euro into the pound. Yen. Now the yen had a funny kind of story here, but it's just like the bonds that I was showing you. These blue professional up bars is professionals getting out on any strength in the yen. We had this crack down into a continuation of the downtrend. I mean, the downtrend, let me just remind you, has been going on for quite some time. So bang, 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 all the way down. Any strength, any blue professional up bars get broken to the downside. This last one was a classic, up to 83 at the breakdown kind of level, and bang, it's just kept on going all the way down. And at some point these better sine wave will flip together. These things are kind of coming back up to make cyclical resistance. Bang, we'll have a continuation of the downtrend on the Japanese yen as well. Aussie dollar, this was the one that lurched down almost like the day after I put that video out, and I said that kind of support at 75 was kind of a critical level. Well, bang, just got massacred the next couple of days. This little sequence, bang, 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 like a little machine gun kind of getting shot down to 74, 73 is kind of down there. And here you can see better sine wave coming together. This energy, they'll cross, flip over, and all of a sudden we're making pullback to end of trend on the way down here. It was a, again on that video, the lurch video, is talking about straight lines in better momentum, straight line kind of going on there, and so it gets cracked to the downside. Won't be an exhaustion type pattern, or maybe it will, but a flush type thing. Some kind of panic is happening. We're going to crash through support, and Aussie dollar is going to go, I mean, mentally this thing, you have to kind of understand the you know, the psychology of the Australians. At a parity, you know, with the US dollar, you know, or above, they're just like, it's unbelievable to the Australians that the Aussie dollar is that strong against the USD. But anyway, all of a sudden we're kind of cracking through 90, and it's like, oh my God, you know, we broke through 90. That's a disaster. And then we're breaking through 80. Hell's bells. Now we're flirting with 74s and 73s. I mean, we're close to 70, and in, you know, record time we've gone from, you know, parity to 70 cents on the dollar. Anyway, all of this, that's what causes these kind of emotional outbursts, which give us exhaustion and flush patterns and so on. So it's when things get psychologically, you know, at different levels kind of coming in. Aussie dollar. So, and then Canadian dollar, and the Canadian dollar lurched down as well here, and this is the first one that's formed this pullback to dirty end of trend, or sorry, pullback to end of trend is what we're making here on the Canadian dollar. So that's all the currencies, and basically it just talks to the strength in the dollar, and it's just taking its time. You know, blue professional down bars into these lows, we're coming back. That's what we need to break through into another little uptrend on the daily chart here. And it's just taking a while to kind of work itself out through all of these things, but that's what I'm looking for. 9.5 on the euro and so on. So then lastly, gold and silver. And I'd like to think that they're starting to bottom, try and find a bottom. Here's silver. It's again one of these kind of blue professional spike down bars here, like crude, you know, at an important level at 15 bucks, kind of down here, and it held because we kind of came back into, well, the highs, the zone or whatever. We're through support at this point here, so we've got to make maybe a pullback to under trend. The problem with gold and silver is that every time we've come into, you know, these highs, all these this last exhaustion pattern here was professionals selling out on that strength here, blue professional bars, and gets taken out to the downside. We've not had an exhaustion sell on the downside on silver. On gold we have kind of down here, and we're kind of flirting with those levels. Certainly oversold, but you know, it's too early to say what's going on here, and we're still cruising through supports, which is bad. You know, potentially another downtrend kind of break here until we get exhaustion. So gold and silver not kind of looking happy for a bottom. The bottom will be made in crude and copper before the bottom is made in gold and silver, kind of based on this activity. Pull back to end of trend, blue professional bars, down bars, exhaustion on the weekly, same kind of thing. Maybe a flush pattern in crude kind of coming in. Something kind of timing there is around $50 is kind of absolutely key. So there we go. Long video, apologies for that, but you know, sometimes these I get some good comments, kind of people coming back and saying they really enjoy the global macro stuff. So the money's running into equities and out of bonds. It's running into the US dollar and out of the euro. It's running into the pound a little bit as a kind of a safety play out of the euro. And then at some point, you know, the smart money is starting to get set for copper and crude. There you go. That's the charts. Hope your trading is going well.